Welcome, everyone, to today's Explainer. We're diving straight into a comprehensive, data-driven look at the Week 21 performance of the gold mining Guardian strategy. We are totally stripping away the noise today, focusing purely on the mechanics, the hard data, and the market realities of a multi-major currency approach. So settle in as we walk through this week's live market briefing.
Okay, let's dive into this. Taking a look at our multi-major command center view, you'll immediately notice the dark, very realistic aesthetic here. You see, this isn't about flashy promises or hype. This is a true, documentary-style look at live accounts and real risk. We're tracking a systematic approach that executes across 4 major currency pairs simultaneously. And transparency? Well, that is at the absolute core of what we're analyzing today.
Now, before we get into the heavy metrics, we really need to demystify exactly what we're looking at. The absolutely crucial thing to understand is that this strategy operates on a live FOREX cent account. So what does that actually mean for us? It means all the numbers you're going to see in these reports are measured in cents, not full US dollars. To put that into perspective, a balance of 4,332.71 cents, that's approximately $43.33. A target of 10,000 cents is basically $100. This specific structure allows for incredibly precise, fractional risk scaling without requiring massive initial capital. We're keeping expectations firmly anchored in reality here, folks. No get-rich-quick fantasies, just methodical scaling.
Our briefing today is going to give you a complete executive overview. First, Week 21 performance overview. Second, lifetime progression and growth. Third, multi-major pair analysis. Fourth, navigating drawdown and equity. And finally, the long-term perspective. Let's get right to it.
Section 1, Week 21 Performance Overview. So, looking at the macro-level weekly metrics to see exactly how this system navigated the last 5 days, you can see the approach remains highly methodical. We're looking at a controlled weekly gain of 1.64%, and in terms of absolute profit on the cent account, that translates to a steady 69.78 cents, which, remember our skill, is roughly 70 cents USD. And this was achieved over 25 individual trades. Again, we aren't looking at explosive, reckless gambling here at all. We are looking at a very calculated 1.64% step forward. And this brilliantly illustrates the underlying health of those weekly trades. Pulling straight from the official MT5 report, just look at that profit factor of 1.73 alongside a recovery factor of 1.60. For those of you familiar with system analytics, you know that a profit factor comfortably above 1.5 indicates that the gross profits are significantly outpacing the gross losses. Specifically, the gross profit was 187.29 against a gross loss of 108.56. It's a remarkably stable snapshot of a week's work. Section 2, Lifetime Progression and Growth. Now, while a single week is definitely interesting, the real story of any trading strategy is told over its lifetime, right? Plus 76.93%. That right there is the total lifetime growth of this account. It's a high-impact figure for sure, and it stands as a massive testament to the system's long-term steady progression. It's exactly the kind of metric that showcases what compound, controlled effort can actually yield over time. Tracing the lifetime balance versus equity curve, notice what you don't see. You won't find wild, erratic, vertical spikes that are immediately followed by catastrophic drops. Instead, what we have is a long-term, gradual upward climb. That blue line right there represents the closed balance methodically stepping higher and higher. This kind of gradual trajectory is just vastly superior to the chaotic, explosive growth curves that almost always end in complete account failure. To really ground that curve in hard numbers, here are the current lifetime metrics on the live account. The total balance currently sits at $4,332.71, which, remembering our scale, means it's just over $43. The floating equity is slightly lower at $4,055.35. And the total net profit generated since inception, that's $1,893.53, or nearly $19. What we're watching here is real, tangible financial progression, just smartly scaled down to the cent level to perfectly manage risk. Section 3, Multi-Major Pair Analysis. A core philosophy of the gold mining Guardian strategy is that risk must be distributed across 4 major currency pairs. It never, ever relies on just a single pair or a single market direction to survive. Now, what's really interesting about this slide is the euro versus the US dollar behavior. Notice the blue and red arrows indicating multiple buy and sell scaling entries. The system is carefully navigating this specific period of market consolidation and directional movement, smartly extracting small advantages from the price action rather than trying to predict some massive overarching breakout. Over on the US dollar versus the Canadian dollar, we observe a really smooth upward trajectory where the strategy just captures value along the trend. When you look at it in the context of the entire four-pair system, USDCAD basically acts as a relatively stable, reliable anchor. It contributes steady gains while other pairs might be doing the heavier lifting over in the volatile zones. And speaking of volatile zones, here we have the US dollar versus the Japanese yen. You can very clearly see the increased volatility and those much sharper movements. But the strategy doesn't shy away from this at all. In fact, it actively utilizes this volatility. The entries and exits mapped out here show exactly how the system aims to capture those larger movement opportunities to generate its profit. Finally, we have the US dollar versus the Swiss franc. Incorporating USDCHF adds a necessary, complex layer of exposure diversification. By actively spreading operations across EURUSD, USDCAD, USDJPY, and USDCHF, the strategy effectively completes its four-pillar approach. This ensures that a sudden shock in one specific regional currency doesn't just capsize the entire account. And to prove this active distribution of risk isn't just theoretical, here is a raw snapshot of the live trade execution history. Just look at the lot sizes, 0.01, 0.02. These are tiny, fractional cent positions opening and closing simultaneously across the euro, the Canadian dollar, and so on. It is a highly active, constantly balancing ledger of micro trades, all working together in harmony. Section 4. Navigating Drawdown and USDCAD. Now, in any realistic documentary of a trading system, we absolutely have to talk honestly about the times when the market pushes back. Looking at floating drawdown, on the left you see the lifetime curve, and on the right, the focused weekly curve. Notice the gap between the blue line, which is the closed balance, and the purple line, which is the floating equity. That gap right there, that is temporary equity pressure. It's floating drawdown. The right chart shows this perfectly. The purple line dips below the blue line as open trades go into the negative, but then you see the gradual recovery as the market cycles and the system resolves the positions, successfully pushing both lines higher. 18.49%. That is the maximum drawdown this account has experienced over its entire lifetime. We state this deliberately, without hiding it. An 18.49% drawdown is a very real metric that represents the temporary pressure and the undeniable reality of live market conditions. Truly understanding and accepting this metric is the difference between realistic progression and pure fantasy. Section 5. The long-term perspective. Let's move to and see how this builds. So, how does a system actually reconcile daily market chaos with controlled long-term growth? By plotting lifetime growth against drawdown over time, the green line represents lifetime growth, while the red line at the bottom represents the floating drawdown. Notice how the green growth line consistently pulls away and separates from the red drawdown peaks. Look, the market will always present challenges and sudden spikes in drawdown, but this proves that controlled, systematic progression can and does thrive even through rapidly changing volatile market environments. And that brings us to the core philosophy of what we've reviewed today in the Week 21 report. We aren't dealing with hypotheticals here. We are dealing with transparent data, logical multi-pair distribution, and a highly methodical approach to scaling capital. As you consider your own approach to the markets, ask yourself, are you chasing explosive, unpredictable spikes, or are you ready to embrace the steady, methodical reality of long-term compound growth? Real accounts, real risk, real progression.